Hedley, a man of many hats, and what I learned is that there's a father and son team here that really is the brain power behind current operation. So what are you seeing in the market? What are the drivers? What are the dynamics? And I guess the projects that you're looking actively at, I guess what are the correlations?
The mining market has been fascinating for the last 3.5 odd years. The major dynamic which we've observed is the major miners recovered fairly quickly after January 2016 was the lower turning point, and the bigger companies turned quite quickly. When they become cheap and the penny drops that they are cheap, the market catches on quite rapidly and the price gets driven quite steadily. In fact, I think just January to February 2016, you would have seen BHP start at about $21, sink to 15 something, and then finish the February period there circa 18 to 20. So, there's quite a bit of volatility in that. We're now sitting looking at BHP having almost trebled since that level. So, there's been an awful lot of value created. That's on top of a broader market performance. The industrial side of the market has not tracked nearly as well. So it's a clear outperformance by mining. But just in the Australian market, there's about 50 stocks that make up that top tier between the ASX 100 and then the small resources below that. There's about 600 companies below that which have not performed nearly as well. There's a number of standouts, but the performance distributions are very different. So the thematic has been a two-speed market. The majors have gone well. The juniors have not gone nearly as well. So good hunting for people who want to invest in the juniors.
Yeah, drilling into juniors for a minute, I mean, there's some great companies there. Some of them are here today, and I guess a great theme. Pick the stock, not the market. Yep. What do you look for from your perspective? I mean, what's a typical term or an investment cycle for you?
Look, 3 to 5 years is probably the baseline that we look at in terms of holding something. But if it starts to go quite well, particularly as it's getting to production and looks like it's got some upside still from there, then we'd be happy holders. And we've had a number of holding periods over our time that have been sort of circa 10 years. So we're happy to be long-time holders in a company. And the evolution of a company going from being an unfunded exploration junior to being a successful producer can sometimes take a lot longer than you think. And if you're happy to contribute to the raisings along the way, you're not diluting yourself. In fact, you might be lowering your average entry price. You can stand to capture more of that value, which is unlocked when you get to the end of the journey as well. What we look for in projects is an interesting one. It's not just projects, it's the whole company dynamic. And that is something which you can put a lot of time into. But at the very highest level, the first thing we assess is people. If they're people that we think we can work with, we can trust them, and that we think are technically competent to do the job, which encompasses many things. There's the technical side of mining. There's also addressing the market. That generally passes the test. But that's the first filter for us. They've got to be people that we think can fulfil that role. The project needs to stack up, and there's two real metrics on projects. There's the valuation piece and there's the risk piece. So across the various commodities and project styles, you've got to be able to separate a product which is saleable. You've got to be able to get it to market. And you've got to be able to do all that with a really nice economic margin as well.
Right, if you cast forward 3 to 5 years, what does the futurist in you sort of suggest is going to happen?
Look, I think 3 to 5 years is probably taking us towards the top of the cycle that we're in. So I would say that we're probably in a boom which mimics the early stages, at least so far, of the China boom, which was 98 to 2008. Whether we plumb the heights of that or whether we form a lower level, I'm not sure, but there's multiples left there in the top end of town. And for the juniors, I suspect that the next 3 to 5 years sees money finding its way from the top end down into the bottom end to be funding some of these projects. And I think the catalyst for that is going to be the bigger companies which have shut down a lot of their growth options over that 3 to 5 year historical period, looking to the juniors as their instantaneous way of starting up that growth engine again.
Mate, when you sort of think about Australia and our role, I guess in the supply to the world of various metals, resources and minerals that we do have perhaps in abundance, where do you sort of see us playing out? If we look forward, do we produce, do we manufacture?
I would love to see a much larger manufacturing industry in Australia, particularly because of the opportunity to value add to some of the really high value, high-tech products, solar panels, and all of the things, building batteries that go off the side of producing quite a few of the commodities which come out of the ground in this country. The sad part about it, I think, is that power costs are quite expensive in Australia and employment costs are also very high. We have a very powerful union movement. It has provided a lot for health and safety, particularly in mining, but through a lot of industrial workforces. But at the same time, those movements now have created very high costs of employment, which makes it hard to maintain a manufacturing industry. Perhaps boutique is possible, and that might be the grassroots movement which could start that kind of a thing. But wholesale adoption of an industry like that, I think, could be difficult. So if we're casting forward 5 to 10 years, it's a maybe. If we're casting forward 20 years, I think that's probably the time frame that it would be possible in. But you'd need to see the grassroots now. America has been much more successful in doing that. I think wages are able to be kept lower there, but there's a much larger population as well to choose from. So just being able to access the arms and legs to maintain a highly skilled but not extravagantly paid workforce is much more possible.
Bringing it back to I guess the work that you have in hand at the moment, sort of with current projects. What do we see coming out of your camp?
We have a joint venture in Indonesia over a plus 2 million ounce resource, and surrounding that resource there's a separately owned package of ground with a almost contiguous plus 2 million ounce resource. So we can see the potential there for a tie-up. It would be a very, very appealing operation once that is all done. And we're looking forward to something happening like that on the ground. We have a drilling program rolling out, so that will extend the resources which we have there. Elsewhere in the portfolio, we have a second investment in Indonesia. They've just attracted a very, very stable and well-funded partner. So we can see that bringing that project into production. A lot of the juniors in the space that we see at the moment have a funding blockage. And that one in Indonesia, which is a difficult country, but a very good project, has just been unlocked. That's our view of that one. And then I guess moving down the chain, we have an investment in a company called Egan Street Resources. It's permitted and otherwise ready to go. It's just going through the funding process itself. Very attractive high-grade project, so obviously attracts a lot of interest. Until the money's in the bag, then you're still going through the process.
Hedley, thanks for speaking with us.
My pleasure. Yeah.